Welcome to the Transparent FX Academy. I'm Nick and I'm a top plotter in TradingView with over 190k reputation points. And in this video, we will try to understand where we have the highest probabilities for a potential move on this pair. Now, how will I be doing that? As usual, first I will be analyzing the pair from a technical perspective, then we will go and see what we have when it comes to the order flow, so the commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. So without wasting any more time, let's jump straight to the charts. Okay, so let's make a full breakdown of the situation that we currently have for GBPCHF. Now, starting here from the monthly, we can see how at the moment we are testing a very important monthly structure area. In fact, this zone was acting as support here, again here, again here, and again here. The market then broke this level to the downside, and all this previous support was turned resistance here. We then broke back above the zone, and at the moment we're testing it as support, and we have already started rejecting it to the upside. So on the monthly, we could expect long-term continuation to the upside, rejecting this support and creating this monthly double bottom. Dropping down on the weekly time frame, what do we see? Now here on the weekly, we actually see a different scenario. In fact, we can easily notice how the market at the moment seems bounded. In fact, at the moment, the market seems bounded in between this previous support turned resistance here and again resistance here, and this previous support, which is now still support here, here, and here. So actually at the moment what we have is a range bound market, and until the market will remain bounded in between these two levels, what we could expect is more potential sideways price action. Dropping down on the daily, what do we see? Now, from a daily perspective, we can notice how the market at the moment created first this M pattern here, and after the creation of this M pattern, we got this move to the upside and completion at the neckline. Now, we wanted to see this move to the upside. In fact, I did make a full breakdown of GBPCHF when the market was around this area, explaining all the reasons for which we did expect the market to create this move to the upside. And by the way, I will link in description this previous analysis, so you can go and check it out for more free education. However, at the moment, what we can see is that in printing this move to the upside, the market has also started to create this W formation. And in general, after the creation of a W, what you want to see is the market create a move to the downside to go and complete the pattern at the previous resistance turn support. So here on the daily, what we want to see is the market to create this move to the downside to go and complete the pattern at this previous resistance turn support, therefore creating a potential short-term shorting opportunity. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing, and we check the data for the pound, we can see how on the pound we went from having a positive net positioning of 2.2k net positions all the way down to now having minus 69k net positions with 14.3k shorts, and it added actually with the last report reaching 110k shorts compared to only 40k longs. So the pound at the moment seems quite weak, therefore this potential rejection to the downside definitely seems possible. And if we go and see what we have on the CHF, we can see how on the CHF at the moment net positions have decreased, yes, from minus 5k to minus 12k. However, in the short term, we are seeing how they are getting slightly increased. In fact, we are seeing that with the last two reports, we saw thousands of longs getting added. So some short-term weakness of the CHF and strength, weakness of the pound and strength of the CHF could easily make the market create this move to the downside to complete this W formation. Therefore, how we could be approaching this potential move to the downside and completion of the W. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, could be looking for a potential move to the downside and completion at this neckline. Now, if you don't know what I'm speaking about when I say market environment shift and valid entries, that is all part of the mentorship program, which you can access now completely for free. The link, in fact, is in the description, and I really suggest that you go and check it out. Now, if you enjoyed this video, make sure you smash that like button and comment below. It really does support the creation of more free education analysis for all of you, because obviously it helps with the YouTube algorithm, and I will see you in my next video.